Today I want to talk about SoFi and their upcoming earnings. We'll start by discussing inflation numbers and how this could affect the Fed's decision making around interest rates, and then we'll go over expectations around EPS and revenue for this quarter. And finally, we'll take a look at some key metrics from SoFi that I'll be keeping an eye on in this next report. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Before we jump into all of this, I want to discuss a trend with SoFi stock, and that is the fact that it tends to go crazy when earnings are announced. We saw this back in January when the stock ran up about 20% in just a few days heading into earnings. However, immediately after the earnings were announced, the stock fell back to similar levels that it was trading at prior to the announcement. This is something that should be avoided for long-term investors. I would say that if you want to hold SoFi for a long period of time, it's a lot better to buy 2 to 3 weeks ahead of the earnings announcement so you aren't buying at these peaks. Because if you consistently bought within the week before or after of SoFi over the course of the last couple of years, you would have been buying at a premium compared to where the stock is traded over that same time period. And just to kind of prove this point, we can look at the last year, and 3 out of the last 4 have shown this very similar trend. The most recent being in January with that 20% move that we just looked at. In October, they also announced their earnings and the stock ran up around 20%, immediately falling back down. And then in July, we saw again about a 25% move, and the stock after earnings fell about 30%. So really, when we look at all of this, what it tells us is that during earnings season, SoFi has a lot of very big swings from volatility from people trading in and out of the stock. So if you're a long-term investor, it makes a lot more sense to maybe capitalize on some of the downward moves instead of buying in when the stock shoots up massively. Before we get into inflation, I also want to mention a couple notable earnings over the last few days, as well as upcoming, that could have a little bit of insight as to what SoFi could report. The first up here is JP Morgan. They reported on April 12th, and they actually had almost an 8% beat on their EPS and a slight beat in terms of their revenue. However, Jamie Dimon came out and spoke about some issues with inflation and decisions around what the Fed could be doing and how this could affect JP Morgan's business. So the stock actually saw a little bit of a decline post this very positive earnings announcement. We also have Goldman Sachs announcing their earnings on April 15th. And if you're not familiar, SoFi's CEO Anthony Noto actually used to work at Goldman Sachs, and they're expected to report an EPS of $8.68 and a revenue of $12.96 billion. And just to put those numbers in perspective, they reported $8.79 of EPS a year ago, so that would be a slight decrease year over year. However, revenue would be a slight increase year over year, increasing from $12.22 billion. When we're talking about banks like Goldman Sachs, JP Morgan, and SoFi, we need to keep in mind the decisions that the Fed makes has a big impact on these business models. And that is why there's a lot of focus right now from the broader market as well as from the banking sector on what the Fed is going to do next. Year over year, inflation hit 3.5%. A year ago, it was sitting at 5%, and a month ago, it was sitting at 3.2%. So we saw about a 0.3 increase month over month on inflation, which is not what consumers or the Fed wants to see. However, one thing to keep in mind is that there was a big drop month over month a year ago. We went from 6% down to 5%. This was a 1 percentage move in inflation month over month. So the fact that inflation only went up by about 0.3% is really not that negative of a thing. However, in my opinion, I think this next report is far more important than the report that we just received. I am not surprised by a small increase in inflation month over month. However, this next month, if we see inflation increase, I think that could be a very bad sign, because a year ago, we saw inflation decrease by only 0.1%. So what we need to see in this next quarter is either inflation staying flat or a slight decrease. A slight decrease or a very significant decrease would be a super positive thing for the market, because I think it would give the Fed confidence that inflation is still going down year over year. And ultimately, that is what the Fed wants to see. They want to see inflation trending back down to that 2% target number that they are looking for. And if they see this trend continuing over the next couple of months, that is when they will start looking to potentially cut interest rates. One thing I really like about SoFi's business is how well they can capitalize on low interest rate as well as high interest rate environments. When interest rates are high, they really really start targeting customers to come in and start using their bank accounts. They are offering very high returns on their bank accounts and their savings accounts, and this really starts getting customers in the door and start using a lot of their other products. Their other products help them capitalize on low interest rate environments. When we think about interest rates going down, a lot of people will start looking to refinance their mortgages as well as potentially move their student loans to other companies. And this is where SoFi comes in and offers low interest rates for these types of products. And that is how SoFi is able to put up solid numbers quarter after quarter. And they're expected to announce their next earnings on April 29th with an EPS expectation of 0 cents and a revenue expectation of $564.3 million. Personally, I like looking at Yahoo Finance a little bit better because they give you a range of EPS estimates. The average estimate on Yahoo is 1 cent of positive EPS. They have a low estimate of -2 cents of EPS and a high estimate of +5 cents of EPS. No matter what this looks like, it should be a year-over-year increase for SoFi as they reported -5 cents of EPS a year ago. In terms of revenue, I think these estimates across Google and Yahoo Finance could be fairly low. The Yahoo average estimate is $552 million of revenue with a low of $529 million and a high estimate of $565 million. What's concerning is this is growth year over year of only 20%. And the reason I think this number could be a little low is because in 2023, they were able to grow their revenue by 35% year over year. And I think SoFi is still in a growth stage where they will be able to keep up growth numbers probably around that 25% mark this year. So for me, revenue is one of the key metrics that I want to pay attention to in this next earnings report because I don't want to see their growth slowing down that significantly. I think they will still maintain higher growth, but they're not going to see an increase in growth where they go back to 40% growth year over year. That I don't think is realistic for SoFi, but I think somewhere in that 25% mark is going to be a real target that SoFi could hit for 2024. Because SoFi is a growth company right now, it is also important that they focus on member growth. And that is a metric that I want to see increasing year over year. And I do think that their growth year over year will be decreasing. So we see in the most recent quarter, they put up 44% growth in terms of members year over year. However, I think that number will probably drop somewhere to around 40%. And that would mean that their year over year number of members will increase from around 5.6 million members to about 7.9 million members. And it does seem like their first quarter is the weakest in terms of member growth. We could see in Q1 of 2023, they saw 433,000 members join. This was actually down from the quarter before of 480,000 members. And then the same trend kind of occurred in 2021 to 2022. In Q1 of 2022, they put up 408,000 members. However, this was down from 523,000 members in Q4 of 2021. So I would expect SoFi to gain anywhere from 400 to 450,000 members in Q1 of 2024. And finally, the last thing that I want to pay attention to from SoFi and their upcoming earnings is their student loan business. We saw payments restart in the back half of last year, and I want to see how that business has changed for SoFi now that we have seen a little bit of time go by since the repayments have began. Have we started to see more customers gravitate back to SoFi and refinance to their platform, or are we still seeing a slower market just because interest rates are higher? And then also, what is Anthony Noto expecting over the course of the next year from this side of their business? Do they think that interest rates are going to fall in the back half of the year? And is that going to have a big impact on their student loans? One thing a lot of SoFi investors do is compare the company to Ally. And personally, I have even done this in the past. However, when it comes to earnings, I think there are some stark differences between Ally and SoFi. And the biggest of those differences come around the stages that the companies are in. Ally is a lot more focused on being a stable company and being a dividend provider. However, SoFi is a lot more focused on growth. We can see for Ally, their current EPS estimate is 34 cents for this quarter. This is actually down significantly year over year from 82 cents. And if we look at their revenue, they're expected to put up $1.96 billion. This is also down about 6.7% year over year. So when Ally announces their earnings on April 18th, I would pay a little bit of attention to it and listen to what they say about the broader economy. However, I don't think they are going to be directly related to SoFi and the numbers that they are going to put up. And that is purely because the businesses are in just different places in terms of what they are trying to achieve. So when I look at SoFi and where the stock is trading at right now, I think that it is a fairly decent value. However, keep in mind that the stock tends to run up either into earnings or immediately after earnings. So buying around this time period is a little bit of a risk, but do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. Today I have a good dad joke for you guys. How many telemarketers does it take to change a light bulb? Check the comments down below for the answer. Thanks for watching.